Hey everybody, welcome back to the Paulie D Show. I'm Paulie D, and I want to talk about mortgages. 3 ways to crush your mortgage. So, you've just bought a house, you've taken out a mortgage, a 30-year mortgage. Congratulations, it's awesome. Awesome stuff. Now, let's think about that mortgage, that debt that you've got for the next 30 years. How do you crush it? Tip one, buy monthly repayments. So if you pay monthly, you're making 12 payments a month. If you pay bi-monthly, so every 2 weeks, you're making 26 half monthly payments per year, which is the equivalent of 13 monthly payments per year. It's a little hack, it's a trick of your own mind kind of thing to increase your mortgage repayments per year and therefore pay it off sooner. Trick two is find an amount of money in your household budget, a daily amount, a small daily amount of money that you could do without if you didn't have it. Let's say it's $5, okay? Perhaps you are in a household where you wouldn't miss $5 on a day, on a daily basis. Take that excess money and pay it off against your mortgage. Overpay your mortgage. Do it in bite-sized chunks. Do it as often as you can and as early as you can, right? Because remember, overpaying on mortgages is paying directly down principal. Okay, so all your interest payments are already bundled in your obligations over the 30 years. If you overpay, that goes straight to principal, reducing your interest liabilities over time. It's a highly effective way of just finding loose money that you won't actually miss otherwise. And the third way, say you're a couple of years into your mortgage, you've never missed a repayment, your credit's good, everything's going fine. Understand your bargaining power. There is not a lender in your country that wouldn't gladly take that mortgage on. So be aggressive. You're looking at the best rates you can possibly get, the lowest fees you can possibly get, no overpayment penalties, all that kind of stuff, better terms, better quality mortgages. Banks, other lending institutions, credit unions, search every year to see if you can improve on particularly the interest rate. Now, there may be fees associated with this imposed by your existing lender, but sometimes a new lender will come on and cover those fees. Even if those fees aren't covered, weigh the fees against the interest rate differential, right? The interest rate that you're currently paying versus the interest rate that someone else will offer you. You may not even need to switch if you go to your original lender and say, I'm going to take my mortgage to lender B because they're offering me this interest rate, which is less than the one you're offering, they may in fact come to the table and say, okay, let's make a deal. The point is to understand the leverage that you have. By having a mortgage and having good credit and a good repayment history, you have the leverage that your mortgage is worth a lot of money to a lender. So you have all the leverage here in that situation. You should use it to your advantage. Always be looking out for lower interest rates. These are my 3 tips to pay off a mortgage sooner, faster, earlier, and more cheaply. I hope it helps. I'd love it if you subscribed. I have other mortgage related content that's going to come out soon. Leave any questions down below if you want. My intention is to really break this down and simplify things and help people just squeeze. It's all about the squeeze, right? Getting as much out of the money that you earn that you can. So I hope this helps, and thanks.